A busy week for several key currencies, so let's have a little look back and assess with Valeria Bednarik from FX Street. Valeria, thank you so much for joining us. It's been quite an interesting week, especially in Europe. How has the euro reacted this week following the continuing troubles in Catalonia?
It's a pleasure to share this with you. And to be honest, I have a very personal view on the matter, more global on where the world is headed these days and into the future. In the particular case of Europe, for sure, it has been a tough week. The previous one started with the sour outcome of the German election, not because Merkel barely won, but because of the high percentage of votes the populist party got, It was a huge sign of where the society is heading these days. I hope I can make a point here quickly, but the media is today focused particularly in Europe with the Brexit and what's going on in Spain. But this is something that I do believe is happening worldwide, see how the elections resulted in the United States and how split the society is in there these days after Trump's victory, right? Anyway, what I'm trying to say is that while I don't see that the situation in Spain being exactly the same, at the end it points to the same. That is the split, not only in the euro area, but in the way how the world leadership is these days. For the euro, of course, the main issue is that the euro area may split and the euro may lose value, right? But I do see that the scheme of political leaders, president, kings, prime minister, whatever you want to call them, voted or imposed, for me it's coming to an end, We are heading into a new world. I don't believe I will live to see it, but society is it's moving forward, right? We are not anymore cows that obey blind diet. So anyway, I'm moving away too much from the issue. The fact is the situation in Catalonia on itself is not the only factor weighing on the common currency, but also the fact that it's replicating all through the region, right? We have French elections, German elections, as I said, Brexit, exit. It's a whole bunch of stuff that is hitting the common currency these days. And of course, additionally, we have the ECB, right? The minutes that the central bank released this week supported the idea of lower for longer when it comes to rates. They are being extremely cautious about quantitative easing tapering. So if the Fed maintains the hawkish stance we see these days, the pair could keep on falling this week, particularly if we have an upbeat outcome of the upcoming non-farm payroll report, of course.
You mentioned the dollar there. Let's move over to look at the US. Has the dollar made any real significant moves this week, and is there much optimism in the US?
Well, to be honest, not sure where this optimism is coming from, but it's there indeed, right? Stocks are at record heights, posting records on a raw daily basis. The greenback is also rallying and has made indeed some progress. We are 4 cents below the yearly high against the euro. We achieved last month, not something that's coming from long. I do believe that data has been quite strong and helping this dollar's rally, particularly the PMIs. And of course, Fed speakers that had been hawkish helped the dollar rally. But the fact is that we are still missing the factors that actually trigger the rally in equities and in the greenback at the beginning of the year. Those are the promised tax reform and infrastructure investment from the new administration. So at this point, seems speculative interested is convinced that they will be sooner or later here. I mean, the tax reform and infrastructure investment, but I doubt that those hopes by themselves will be enough to maintain the dollar up for long. Maybe with a strong employment report today, the optimism will persist during the upcoming weeks, but if there's no progress with particularly with the tax reform that has been announced these last few days, and if inflation remains subdued, the risk for the greenback turns towards downside. We may see some strength a couple of weeks more, but it needs to find a sustainable base in the longer term.
And finally, let's have a little look at the UK. It's been quite an interesting week for British Prime Minister Theresa May with the conference speech from hell. How has the pound been performing off the back of this?
Poor Theresa May. To be honest, I didn't hear the speech, but what I read after was the last nail to May's coffin. The conference hit May's leadership, right? Ruined by the comedian and her coughing. Nor the market nor the UK policymakers could take her seriously after that speech. Poor May. But the main issue is not the speech itself, but the fact that there's no Brexit strategy. She has no clear plan. She has made lots of flourish speeches about the future, but clearly that's not enough for the market and, of course, not for the pound. We have had, I'm pretty sure, 4 rounds of Brexit negotiations so far this year, and no progress has been made. That's the main issue. That's why Theresa May is losing her leadership. That is why the pound is falling, right? Of the uncertainty that the lack of progress in Brexit negotiations is triggering, right? I said this before, and I still believe it. The UK, has no dealing power at this point. It's all about the euro area. And the euro area can impose whatever they want, right, to the kingdom, making it tough for them to leave as a warning to the rest of the members' union, That's the name of the game these days. The pound will probably remain under pressure, beyond Laura's strength or weakness. It's weighed by political uncertainty, and that has been the main market model for the currency pretty much since the Brexit started.
Valeria, thank you so much for speaking with us. It's been a real pleasure.
My pleasure, really. I love to share it this time with you.
And thank you for watching. And if you like this interview and would like to find out more, be sure to head over to dukascopy.tv.